Bitcoin is flirting with resistance and everybody is hoping for a break to the upside. That is why there is $14 billion in accumulated liquidation below us. Will the Bitcoin whales exploit this and start crashing the market to the downside in the next few weeks? Let's analyze. Hello ladies and gentlemen, this is someone from Market to Paradise, and in one of the previous videos I've told you that Bitcoin will start pushing to the upside towards this resistance, and then I told you that Bitcoin will start correcting from there. As you can see, that's exactly what happened. We have started to push by around 3% and then we started to correct, right? However, right here Bitcoin got stopped and we are starting to consolidate once again and attacking this resistance for once, twice, 3, 4, 5 times, ladies and gentlemen. Is the same rule that we have been analyzing right here on the weekly time frame, that after a fifth touch the moving average trend line gave up and we have started pushing through it. Will the same rule apply here on our low time frame chart? We will analyze that in this video. For now, it's very important to understand that in the crypto market there is a high selling pressure going on, and that is why you should be focusing only on the short side, as we are doing with Paradise Family VIPs. During this period we have been creating short-term trades. For example, Flirting, ladies and gentlemen. As you can see here, we had our limit order and then we started crashing to the downside, and currently we have taken our target free. By the way, Flirting and other meme coins like this, make sure that you are only focusing on shorting them, because very simply all of them are just clear pump and dump coins. For example, with the team we have been updating you that the meme coins like Trump and Melania, the team behind creation of these tokens, they are silently selling on you, and at the same time they are doing everything they can in order for you to believe in those coins, provide them with that buying liquidity so they can beautifully offload their coins and take their profits. Keep in mind that most of these meme coins, 95, sometimes less, sometimes more, 50 to 95% always of the circulation of these coins are being in hands of only few people, okay? And they are manipulating the prices very easily, the same way the Bitcoin is being manipulated, alright? And unless you have some insider information, meme coins buying and hoping for a moon, well, you can get lucky, right? Like in trading, but more often than not, if you keep buying and selling them and trading on these coins with a goal just to get rich quick, with a goal of seeing some moonshots, you will fail, okay? So make sure you avoid them, and if you don't want to avoid them, make sure that you are trading them with a proper trading strategy, ladies and gentlemen. In this video right now we will be, however, talking only about Bitcoin and what is the probability of Bitcoin pushing a little bit through this resistance and then dumping to the downside. Well, first of all, we need to understand what is the driver that would help Bitcoin to push through the resistance a little bit and liquidate the over leveraged short positions that are currently being out of frustration being opened right here below resistance. So first of all, let's understand, how do I know there is some over leveraged short positions? Well, because I'm taking a look at the liquidation heat map, right? And on the 48th hour time frame we can see there is a extremely bright spot above us, right? That is going up to around $97,000, ladies and gentlemen. So I would really like that to be liquidated, because as we have been talking about in the previous video, when there is loads of leverage on one side, if we start pushing to the downside from here, it will basically create a loads of pressure on the sell side, because these over leveraged short positions with 60, 70 x leverage, it's enough to just move the market a little bit, right? And right here they will start taking profit, and once you close a short position it will automatically open a long position, and basically pushing the market down will be hard. So what's easier for the market makers is to push through this, you know, liquidate all these over leveraged short positions, then there is an empty spot, and then push the market to the downside. Why to the downside? Well, because majority of people are still very bullish, right? They believe that this is a new trend that will take us to new all-time high. So as you can see below us, then there are loads of liquidation pools, and much more profitable is going to be for the whales to start pushing to the downside after we liquidate these over leverage short positions. Why is it better to push to the downside? We can also confirm right here on our liquidation map, because you can see that really some over leverage positions right here are, and after that $97,000 level there is pretty much nothing. But on the downside, well, there is $14 billion $100 waiting to be liquidated, and it's ending at $83,000. There is not enough data, we don't know what's below that level, but we have a little bit of an idea by looking at this liquidation heat map. We can see that there is still plenty of room to continue to go to the downside, even towards $74,000 in just a few weeks time frame. Together with that, we can take a look at our accumulated funding rates. You can find them on our website mycryptoparadise.com. As you can see on Binance, and this is one of the most important exchanges you should keep an eye on when analyzing the funding rates, we are turning slightly negative. Okay, what does it mean? Right now, at the moment, on 1 day time frame, there are some new short positions and they are exceeding the long positions. That's why the shorts are paying longs and we have negative fundings. However, if you shift towards 30-day time frame, ladies and gentlemen, you can clearly see that the funding on Binance is highly positive, and that really just again confirms that there is a higher profitability for the market makers to liquidate all of these long positions, because if we would be pushing to the upside the same way as on lower time frame, it's gonna apply on the higher time frame as well, right? If we start pushing to the upside, these long positions will start to take profit, right? And that will create a short position and create a pressure on the buy side, and it will not be that easy to push the market higher and for the market makers to make any easy money. It's not going to be that easy, right? So if you want to be a professional trader, you need to be following what with the highest probabilities the whales are doing and really follow their steps, and as a smaller whale or even a fish, just ride the waves with them, right? But for that you need to have discipline, and you need to make sure that you are playing the market, not playing your emotions, neither what somebody else tells you on social media. Okay, you need to have a strategy, tactic, and follow it with discipline. That's how you stay consistently profitable in the long run. But that's not enough. We will start analyzing right now Bitcoin on ultra high time frame. We will also take a look later in this video on USDT dominance, and let's try to understand how USDT dominance predictions can help us to understand what is about to happen with the highest probability with Bitcoin next. But right now let's start on ultra high time frame, ladies and gentlemen. Let's have a look how the weekly candle closed. We can clearly see we have closed it above the major level $93,000 that previously been working as a strong support, as you can see, and we have been testing it for multiple times, okay, before we have been able to push through it finally. Right now, however, loads of people are getting trapped right here because they believe that on a first try we will turn this into a support and start moving higher. That is, however, coming with a low probability, and this is also not how technical analysis works. If you want to overcome and reclaim some important resistance or support, you usually need way more touches than one. As you can see here, we have multiple of them. Here we had 5. It's usually 5, sometimes more it's needed, but the rule of a thumb is that 5 is needed for any major resistance or support to get broken. Why? It's simple, it's logical. Imagine it's a wall, right? And you are smashing the wall with a hammer once, twice, thrice. Every time you smash it, it gets weaker and weaker, and sometimes it just cannot handle the pressure anymore and it give up, right? Sometimes it can happen that you have a big hammer and you can smash it on the first time and it just give up on the first time, but for that you need a big volume, right? And as you can see on the moving average volume trend line right here, this candle that been pushing through this resistance been on a very low volume and actually declining one, right? Even this one was stronger than we had this one that is trying to reclaim this resistance. So to have a high probability conviction, okay, that this resistance is being turned into a support, what I want to see is one more weekly candle to close above this resistance, above $93,000, ladies and gentlemen. Then there will be a high probability that we will continue go to the upside towards $102,000. This candle is closing within 5 days, 8 hours, ladies and gentlemen. If there will be some confirmations together with the weekly closure, there will be plenty of room to make some nice gains on this move. However, the moves comes with a very low probability. On a swing trading perspective, we will be focusing on shorting anyway, so this will just provide you with a better shorting opportunity upon confirmations, obviously, but this is already very low probability of retesting $102,000, and even lower probability is to start creating a new all-time high. Even though it's possible, as a professional traders we need to be able to adapt to the market like water does to its environment. That's the reason you are playing with probabilities and you are ready for any move, because your trading strategy is prepared for that. However, already touching that $102,000 is very low probability. We will try to understand that why on a lower time frames, ladies and gentlemen, from ultra high time frame perspective. In the previous videos we have been analyzing the oscillators. Have a look at that. That is also decreasing the probabilities of retesting the $102,000, but even more decreasing the probabilities of making a new all-time high from here. One of the reasons is that we are creating a nice Elliott wave cycle, as you know, right here from 19,500. If you have been around and in our free Telegram channels, you know that we have been perfectly catching this week at $19,550, ladies and gentlemen. With Paradise Family VIPs, we are starting a new trend and we have been aggressively buying Bitcoin and accumulating some long positions. Not only we have positioned ourselves perfectly for the first wave of an impulse, but also for the next higher degree trend that we have started, ladies and gentlemen, and we have perfectly completed the 5 moves to the upside. Right here we have sold everything. If you have been around on YouTube, you remember that, right? I have even told you what we are doing with the Paradise Family VIPs, and I've told you that we are completing the cycle and we are going to $77,000. Then we will have a move to the upside that we are having right now. That's the move to the upside that I've updated you about since January 30, ladies and gentlemen, since January 30, and then I told you we are going to $44,000 and nothing is changing. Still, this is all in play, plus minus few thousands here and there, but everything is perfectly working based on the Elliott wave cycle, ladies and gentlemen. And right now I do believe that we are finishing the B wave of the zigzag and we are ready to start going in the bearish trend that we have started, and that after finished Bitcoin will appear at around $44,000. However, that will be the time everybody else will be calling for a new bear market, ladies and gentlemen, but not us. We are prepared for it because we know that this is just a higher degree second wave, and then we will start to trend higher towards $240,000 as a third higher degree wave, ladies and gentlemen. And that will be the time once again where everybody else will be talking about a new bullish market and we will be taking profits, already preparing for the fourth wave, ladies and gentlemen. However, right now let's analyze the price action of this B wave. How can we say that we are finishing it, when it's gonna finish, and what's gonna happen next? So for that we need to zoom in a little bit. So basically the ultra high time frame, weekly time frame is still bearish. One more thing I wanted to share with you before we dive deeper on the technical side is again from our website mycryptoparadise.com, the fear and greed index, okay? And what is actually supporting the bias that right now we need to move a little bit to the upside. So as you can see, we have some trend going on, right? On the fear and greed index, we are highly in greed. Social index is extremely high on the 1-day time frame, ladies and gentlemen. As you can see, we are from the last 6 months moving around the top of the greed we have had, and always from the top we have moved lower. We went into a fear and the price of Bitcoin been following absolutely perfectly. But if you are watching closely this trend of fear and greed index with me on our website, ladies and gentlemen, you can see something interesting happening right now, and that's also the reason why there is some over leveraged short positions right now. We have turned some bulls into bears at the moment, okay? So let's take a look at that. Here we had loads of greed, but the market wasn't moving nowhere. We have been consolidating, right? So some people changed their mind and they started to turn into bears, all right? And the greed little bit dropped. However, the price, as you can see here, it was $83,600 and the greed dropped, but the price pumped to the upside, right? A little bit. We have ended at around $84,500, ladies and gentlemen, even $85,000. So basically there was divergence between the fear and greed index and the price of Bitcoin, and because of that we have started to move higher towards $93,000. Here again the greed pumped to the upside, then we have been consolidating for a while, and now again it's dropping, but the price is not dropping. The greed is dropping, but the price is consolidating. The same thing that happened right here. So based on this trend we can understand that with the highest probability we will need to get back to that point level 80, right? That will again increase the greed in the market, and then I believe it's going to be the top and we will start moving to the downside together with the price, ladies and gentlemen. So this is nice divergence that you can observe on the fear and greed index, and that can help you with the probabilities count, okay? This is just increasing the probabilities that we are about to push a little bit higher before we can go lower. But how higher? We can analyze it based on using some technical analysis skills, right? So let's dive deep right now now inside of this price section, let's zoom in and let's analyze the daily time frame, aka high time frame for us. Alright, ladies and gentlemen, so first of all, how can we understand where the ABC zigzag is going to finish? Well, we have multiple ways of how we can tell. One of them is the channeling that we have been discussing in the previous video already, right? You basically create a parallel channel from the bottom of the A and bottom of the B wave, then you copy the slope and you put it to the top of the A wave. That gives you a rough understanding where the C wave is going to be finished. As you can see, we have done exactly that. We have put it to the upside. As you can see, the C wave already tested that, the price action already tested that once and even twice. We will see that on a lower time frame very soon. I will be analyzing this time frame for you as well. And we already know the rule that if it's going to be hit for the third time, it's going to be a big no-no, right? Then there is going to be a high probability that we might reclaim it and continue to go to the upside. So we need to be prepared for that and also understand that it is very low probability of that happening. So higher probability is that we will not go even a little bit close to this trend line anymore and we will start going in an opposite direction rather soon. But when? Well, we will be calculating also the subwaves. That will help us once again to understand when the C wave is going to be finished and when we can start having the reversal to the downside. But let's stay a little bit longer on that high time frame because there is a little bit more indications that can help us to understand where the C wave is going to finish. Another one is resistances. As you can see, I have multiple of them right here. There is Fibonacci at around $100,000, but the most important one is right here at around $97,000, ladies and gentlemen, because it's not just a Fibonacci retracement level, but also a previous structural point of control. As you can see right here, it was working greatly as a support. Also, the fourth wave finished right here, as you can see, and also it's the bottom of the second wave of the previous impulse. Let me show you what I mean, ladies and gentlemen, because the zigzag is subdividing itself not only into three smaller waves, but also each of these waves are having each own subwaves, ladies and gentlemen. And what is important to understand is that the A wave is motive wave, B wave is a corrective wave, C wave is also a motive wave. So that means that the A wave is usually an impulse or a leading diagonal. If you have been around, you know that we have been perfectly predicting each and every move, and it was indeed an impulse, ladies and gentlemen. And the B wave almost always ends at the bottom of the fourth wave or the bottom of the second wave. Very rarely, and even more rare, is that it's gonna retrace the whole A wave, ladies and gentlemen. It's possible, but extremely rare. In 95% of cases, it's end up at the bottom of the fourth wave or the second wave. So as you can see, together with all of these indications like the point of control, Fibonacci retracement level, previous structure support now turned into a resistance, we also have it as a bottom of the second wave, ladies and gentlemen, of that previous impulse. If you have been around, you know exactly all the waves perfectly. This was the third wave, then fourth wave, and then fifth wave ended up right here. And as you can see, we are already inside of this first and second wave, and this is extreme resistance from the Elliott wave theory as well. Together with that, what is decreasing the probabilities of starting a new trend is again on the medium time frame as well, the divergence of volume, what we have seen also on the ultra high time frame, right? On the stochastic RSI, we can see that we are prolonging the period that we are trading above the overbought zone. We already have also a bearish cross. As you can see, the blue line crossed the red line, ladies and gentlemen. That is very bearish. What we can see is a bearish divergence on RSI as well, because we can clearly see that we are creating higher high and going to the overbought zone on RSI indicator, but on the price action we are having equal high, ladies and gentlemen. That is a bearish divergence. And on the MACD indicator, we are not having a bearish divergence, but we are having a decrease in momentum. Okay, so that's also decreasing the probabilities of pushing through such a strong resistance, ladies and gentlemen. So medium time frame also bearish. Let's zoom in inside of this price action. Let's try to understand the subwaves of the C wave to help us better understand where the C wave is going to turn over and we can start crashing to the downside. So let's start analyzing the medium time frame right now. As you can see right here, we have already the two touches, ladies and gentlemen. The longer the consolidation is, the higher we can actually go, right? Because we just cannot touch once again the uptrend trend line, ladies and gentlemen. So the more we decline and prolong the upward price action, it's not just taking an energy from the overall trend, but also decreasing the probability because of that we will be reclaiming that channel. If we take a look at the subwaves, ladies and gentlemen, the C wave is a motive mode wave that it subdivides itself into 5 smaller waves. Either it can be an impulse or an ending diagonal. We already know it's trending inside of an impulse, right? This was the first wave, second wave, third wave, fourth wave, and right now we are finishing the 5th wave. We will be taking a look inside of this 5th wave on a lower time frames, ladies and gentlemen. On these two, we will take a look also at what's going on right here and why we are right now breaking to the upside. What is the pattern that confusing lots of traders caught, ladies and gentlemen? But firstly, let me show you also on the medium time frame one very important thing, and that is the MACD indicator, ladies and gentlemen. As you can see, we already have a bearish cross right from here, from when the price tried to retest the moving average, but we don't have a bearish divergence yet. So what I want to see is the price to go a little bit to the upside above the previous high, ladies and gentlemen. We will start to get some bullish momentum, but the bullish momentum will be much lower than the previous one that we have created right here on this high, and that will create a beautiful bearish divergence, and it will increase the probabilities of going to the downside, ladies and gentlemen. So we are prepared for that. We are preparing our tactics for that, ladies and gentlemen. Right now it's just understanding that we are bearish, right? So here and there we are preparing low conviction shorts, but once we have more probabilities, you go more and more aggressive and you really start to bet more of your portfolio inside of these trading ideas. That's just how the professional trading works. You increase your risk together with increasement of the probabilities, and you really don't need to know exactly what's going to happen. You just react on the market. You wait for the market to give you some opportunities and then you react on it, right? So I want to see some confirmations, then I go aggressive. That's it. And it can be lower. Let's say we start dropping from here, right? What I'm gonna wait for is a break below this support, retest this previous support into a resistance. I want to see a low momentum, low volume on this retest, and then I will create some beautiful short positions, very high risk positions, because this is going to be a change of trend with high convictions. Then we will check what the whales are doing as well, on-chain data, what is going on behind the scenes, and thanks to that we can understand based on how much probabilities we have on our side, how aggressive we're gonna go on any trading idea. So right now, however, it doesn't look like we will be dropping from here, ladies and gentlemen. As I said, and as I'm analyzing for you, higher probabilities to liquidate the over-leveraged short positions, then we will start moving to the downside. So let's zoom in inside of this 5th wave, ladies and gentlemen. Let's see what's going on. And because we don't have much time left, we will shift our focus towards low time frame already. From here, however, I just expect a move like this, and then we will start shifting this previous support into resistance, and we will go to the downside. But let's understand what's going on right here. Just quickly right here, the subwaves. Here we had finished the higher degree 4th wave, and then we started the 5th wave that will finish around here, ladies and gentlemen. So basically the subwaves of the 5th wave need to be 5, right? So 1, 2, 3, 4. I will analyze for you this, and then right now I do believe once we will start breaking above this, we are starting the 5th wave. And by the way, we are already trying to break from the triangle. So basically what we are creating right here is a double 3 pattern, ladies and gentlemen, that is very often being formed inside of a 4th wave, ladies and gentlemen. So as you know, this was the 1st wave, 2nd wave, 3rd wave. In the previous video I've been updating you about this triangle, and I told you we will start breaking to the upside. We did exactly that. However, it actually wasn't the breakout I was waiting for. It's not even truncated 5th, ladies and gentlemen, because right now I do believe that we have created a zigzag ABC and a triangle right now, ABCDE. This was converting wave in our double 3 pattern, ladies and gentlemen. Let me show you what I mean. Basically this is a descending double 3 where you have W, X and Y, ladies and gentlemen. The X is usually a simple zigzag, and the W and Epsilon are usually more complex. The W, as you can see, was created inside of a zigzag pattern ABC, and then we had this simple contravening wave right here, ABC, that was zigzag, and then we started to create a triangle, contracting triangle that subdivides itself into 5 smaller waves, D, E. Alright, here, from here we are starting a lower degree 5th wave, ladies and gentlemen. I do believe the price action will look something like this, and we will either end right here or right here, and after that I do believe the highest probability thing is upon confirmations we will start moving to the downside. So that is my analysis. I needed to end up very quickly because I'm over time already. In the next video I will analyze for you also the USDT dominance that is just increasing the probabilities for us. For now I will just tell you that I do believe the 5th wave will finish right here. That will help the Bitcoin to push higher. So until then I will see you again on Thursday. You know that I'm recording every every Tuesday, Thursday and Saturday. And until then, trade safe, smart, and I will see you next time. Cheers.